Good morning once again, everyone. This is our next pro Saturday morning Dow clearing session. The month of Feb has come to an end, and it came to an end with a pretty sharp sell-off in yesterday's session. Today morning, I have 3 time frames, but I'm using the monthly on my left. I've kept weekly on the center and daily on the right-hand side so that we will be able to visually evaluate how the monthly charts look like for the sectors. Starting off with the benchmark Nifty. Not that great in terms of Heiken-Ashi language. We've got a range expansion. We've got a decent red body. Our state of flow has started to shift negative. These are not good readings from the monthly perspective. Monthly charts did extend well and hit an all-time high. But after that, this correction is, will it open up on the other side? Will it open up another leg on the downside or not? That is the main $1,000,000 question. So monthly charts are slowly weakening, which means that one needs to be a little careful and cautious. Coming down to the weekly, I just showed you that first leg of correction, then the pullback, the bounce back, which was sharp enough to even go for an all-time high. And now it has started to open up on the downside, which clearly, raises the possibility that this can come all the way down to these lows or these lows. So what about the weekly chart? Now, the weekly chart, which was holding well thanks to those US India trade deal kind of a bounce back that we had, that is this one on the daily time frame, things have fizzled off. So positive cues are not able to manage to hold on to those positive moves. Weekly chart has lost its state of flow, which was till last week was positive. Red-bodied Heiken, close almost at the lowest point of the week's range. Pretty decent wide-ranged bar. Again, not that good. Not that good is very, very clear on the daily time frame. We were eyeing this range of supports, which was doing pretty good job for some time, multiple times. But with yesterday's 317 points sell-off, it has broken below that pretty comfortably. No sign of any divergences, no sign of any particular bottoming out right now. I will keep this range on my charts on the daily chart for a few more days, maybe weeks, just to see that if prices bounce back, will it start to offer any resistance or not? If prices bounce back, that is very important. So monthly weakening, weekly could not hold on to the weekly strengths that we see, that we have noticed 2 weeks back. And the daily is definitely in a clean state of flow on the negative side. So overall, that's the state of flow on the daily. So overall, all the readings are adding up to be bearish, turning bearish. And so strategically, if you're a long-only trader, again, sadly, this is your time to step back from a momentum trading point of view. Of course, you can look for opportunities to buy on a dip in terms of your long-term investment portfolio. But from a trading portfolio, long-only traders, not the best of time. And the momentum is not in your support either. That's the Nifty view. If you are in the derivatives and you're trading long, short, both, and of course, you will get both kind of trades and it will start to shift more towards the short side. As a view on the Nifty, stay away, bearish, turning bearish. So wait for selling to slow down. Mid and small caps, the monthly chart and the weekly charts more or less resonates with what we saw with the Nifty. So same view there on the mid cap. Mid cap is relatively better to the small cap. You can see the small cap has been in a down or a negative state of flow for last 2 months. Weekly has given us a bounce back wherein you can clearly see some serious amount of polarity is playing out. Daily is choppy and maybe on the verge of a breakdown considering markets are weak. So small cap, definitely not that great. And mid caps are more or less in line with the Nifty, which is weakening. Now we'll take a look at the sectors. And when we do that, when we take a look at the sectors, we always take a look at RRG graphs to figure out relative strength. That gives us a little bit more clarity, understanding, right? So let me pull out the RRG or the strike analytics from my left-hand side screen. There you go. I will select NSE sectors. I will select the 500 as the benchmark. I will use weekly as our time frame. And generally, I use around 12 to 13 weeks, which is like a quarter. I will go back to the Nifty chart and take a look at the weekly and try and figure out if there's any kind of a meaningful weekly count that I can take. Well, of course, the market did hit an all time high in this area. This was the last convincing up move with multiple or two main positive hikens. After that, not really a move like that had come. This was a very sharp gap up because of the US India trade deal. So if I bring myself here and if I do a quick count, how many weeks have passed since that week? Right? So I'll count from here and till that is the week that just passed. It's 11 bars, around 12 bars is that we take. So yeah, I think that's all right. In this phase, when the Nifty had started to face selling pressure, a little bit of bounce back, but serious selling pressure, STT, the budget revival or gap up because of the trade deal, again, follow through sell-offs. In this entire fiasco and choppiness and chaos, it's been around 11 weeks. So with that in mind, from the Nifty's perspective, we're getting the 11 count by looking at Nifty. If we take a look at CNX Metal or PSU Bank, it will not make sense. But during this 11 weeks, how have the other sectors played out? That is our logic. So weekly and the count from 5, I'm going to increase it to 11. 11. Yep. Okay. Let me cross check. NSE sectors, Nifty 500 weekly, 11 counts. Perfect. Let's sort the percentage change. And shall we begin with the leading quadrant? Now, one thing that clearly strikes out very clearly is the number of sectors which are in the leading quadrant. That should give us a bullish bias immediately in relation to the sectors, number of sectors, not which sectors, but the count of sectors which are in the lagging. So PSU Bank, Metal, PSE, Energy, lots to discuss. Because PSU Bank is the biggest percentage gainer in the last 11 weeks, followed by the metal. Before we get into PSU Bank, let's start with Bank Nifty. Then we'll talk PSU Bank, then we'll talk private bank, and then finance. So we'll be done with that finance pocket. Bank Nifty, RRG, good. A rising RRG, gaining relative strength, gaining the momentum of the strength. This is a good RRG. This is a positive RRG. It's on the leading quadrant. It's not really right out there on the right-hand side corner. It's just more or less in a sweet spot from where it has the possibility to lead. So it's been doing good. It may continue to do good. All depends on price. If Bank Nifty is playing out like this, private bank will more or less mirror that. More or less. Not as angling up as the Bank Nifty, little flattish, but same view. PSU Bank, on the other hand, had a wonderful revival. Few weeks back, it was slowing down and it entered the weakening, did a U-turn and just picked up fantastic. So PSU Bank is showing strength. And let's quickly add Nifty Financial Services. And this is a good looking RRG. A good looking RRG does not necessarily mean that the markets will bounce back and rally. Good looking RRG means that relative to the Nifty 500 over the last 11 weeks, this is doing relatively better. So even if it's falling less. Falling less than the benchmark is relatively better. So let's understand that. With that thought process, Bank Nifty, Private Bank, PSU Bank, and Nifty Financial Services, all these four, one should be looking at bullish trades if we consider relative strength. Now we will go to these individual charts and try to find out whether actual price is showing us any such signs that if relative strength is telling us, come on, this can go up or it can give us a breakout, is the price giving any such signs or not? Bank Nifty. Last week we had kept a bullish flag. I'll take a look at the weekly first, then I'll quickly add on the monthly. No problemo. It's fine. It's okay. Yes, the Heiken bodies are shrinking, which means momentum slowdown. Yes, the shadows are increasing. Yes, there are resistances. but structurally, there's not much of any significant damage. Which I don't like is the monthly outside bar. An outside bar is a largish bar, goes above the high and below the low, which creates a large, wideish range. And going forward, it becomes choppy. Bank Nifty came off almost, 1% in yesterday's trade. And a bit of polarity might play out. It'll be very difficult to draw here because it's been so choppy of late. What I'm trying to suggest is something like this. If you take a look at the daily, um, highs and lows, more or less in that area, it's what, 60, point 2, 60.4. That's the area for the Bank Nifty. We might see some short term um, supports. So, what should we do? Let me just go to the visibility and change to just days. So, I think we should keep the weekly flag, our flag, which we keep as an end of the week view, should stay green. We're not seeing any immediate signs of revival. So we're basing out our trade completely on price. So if that's the case, private bank, which we had kept green, is not as good looking Heiken. Two back-to-back HAGBs. We call it bars of consolidation. We need a breakout. It's on the verge of a breakdown. It can give us a breakdown. But if I add RRG with our state of flow, this flag should also stay green. PSU Bank, I don't think we don't have much of a problem here. Very stretched. Please remember, markets always correct when everything looks the best. And charts and markets generally reverse from the bottom when everything looks the weakest. So looking very, very good. Yes, because of the price does not necessarily mean it's a buy. It is definitely stretched. It's always good to buy on dips. But flag wise, what is your view on PSU Bank? If you give importance to relative strength, if you give importance to trend and price, it should be bullish. And CNX Finance. Yeah, you can see, you can figure out the outside bar. These are not easy times if you are a short-term momentum trader on either side of the market. You will do only good if you pull out your profits quickly, or else you will see the profits and those will go away very, very quick. I think that's exactly what has happened over the last month. Entire Feb was more or less like that. So I think it will continue as we step into March, FY end, and I think we will probably continue to face that volatility. If you add these if you talk about in terms of patterns, they form this broadening formation, not a very healthy market. But price wise, relative strength wise, they are bullish. We will keep a bullish bias. We will be looking out for long opportunities, period. Now that we have covered these four, the next one is Nifty Metal. Fantastic in terms of RRG reading. Let's add another one, public sector, enterprise, and energy. Let's talk about all these three together. Metal, the amount of relative strength it is enjoying is huge. It's got momentum behind it also. So very, very bullish. Public sector enterprise, very good looking RRG, and it's been good looking for last 11 weeks. I've been talking about the PAC and the energy pack within our community. And but it does not have a lot of relative strength. You can see how far it is and how far metal was. So it has some headroom. And you add energy to that. Energy has just entered, knock knock, the leading quadrant. So PAC energy stocks, yeah. If you trade stocks, you will easily be able to identify them. That the charts are looking fantastic. So metal, PAC, energy. Starting off with CNX metal. Strong, strong, strong everywhere. Monthly is very strong. Weekly got marred with couple of relative, these negative divergences, supported by a hidden divergence, pulled up, and it's a strong chart. Come on, it makes sense to stay long. Don't try and pick the top. Public sector, enterprise, and energy. So CNX energy first, on the verge of that breakout. We had spoken about this area, this zone multiple times, end of the week, and even during our community discussions. This is essentially the area what we are talking about. I'll keep it only on the weekly chart. And it has just given us that breakout. has given us this breakout with the help of 1, 2, 3, 4 weeks of pretty sharp rally. It's bound to get a little tired, but the good thing is the structure is reversing. If the weekly charts, if the monthly charts, I'm sorry, reverses, it's actually going to be very good for the energy, which means if you go to CNX PSE, overlapping names will be there. It has clearly given us that respective breakout. I'll draw that here as well so that for our future reference, it stays. So PSE energy PSE के अंदर energy stocks देखिए and that narrative kind of is playing out well um, in these two sectoral charts, PSE and energy. We also spoke about metal. So no problem, green flags everywhere. Flags are green, but the markets don't seem to be bouncing back. Pharma, you can see in the last 11 weeks, you can barely make out of what it is really trying to do, isn't it? We can just zoom in and see that it has just started to go up. But 11 weeks, it was more or less in this area. Little relative strength, no relative strength, momentum improving, momentum shifting down. So it did not have that clarity at all. Now, okay, the angle. I like the angle. Every time I open up RRG, I always say this. That kind of an angle is always good. Pharma, last week we had kept a green flag because the weekly charts were improving. The center chart is weekly. I'm sorry. And you could clearly see that the weekly charts were improving. Monthly charts are tough. They are tough. But the good thing is the monthly close is near the month's high. Month's high was close to Jan's high. Jan's high is close to all-time highs. Are you looking at a breakout? Maybe a cup, maybe a handle form. I have no clue. But weekly charts are bullish. Stretched. Don't chase. That just doesn't make sense to chase. Any kind of a meaningful pullback, if there's strength in this rally, it should not pull back too much and it should give us another leg on the upside. So Pharma needs to stay bullish. No problem there. Okay. And private bank we have discussed. So all the sectors we discussed, which are there in the leading quadrant of the RRG, price-wise also they are positive, which is a good thing. Now come to weakening. Auto is weakening. Mid-cap 100, we have discussed that. And IT. Let's talk about IT. What was looking as the leader in a very short span of time, price-wise and relative strength, of course, has weakened significant. I always add up IT and digital, these two sectors together, because digital, it has some IT names to it. IT and digital, both of them, we had kept red flag for some time. I think from last week. And for the last, in fact, 2 weeks, for the last 4 counts, the state of flow has gone negative. And you can see the damage it has done on the monthly time frame. When you see a damage of this proportion, price-wise, okay, let's talk about price-wise. Can we go back to this high and try and figure out how much CNX IT has corrected? That this can easily be figured out from the info line. You can go up there, drag a line all the way down here, double click, and you don't want it to be in all your charts. Let's keep it to the monthly. And you're looking at a 35% correction. That's a pretty more than a healthy correction for the second most important sector. But it doesn't seem like it's stopping anytime soon. If you're one of those guys who loves to buy a falling knife or a falling sword, that is your call. But in these sessions, we generally talk about relative strength, trend, and positioning yourself with the strength and with the trend, not against it. Against it, you can do it from an investment point of view that you're getting at a discount. We are not going to discuss those things. But what I was hinting towards is the fact that maybe with this kind of a 35% fall, these kind of sharp falls probably may do a soft landing somewhere here. I don't know. Are there any signs of any soft landing? Nowhere. The daily chart is giving me a short-term divergence, which can give me a short-term bounce back. Apart from that, honestly, nothing much. So IT, long trades, not happening. Contrarian long trades, maybe from the daily, but you need to really be gutsy to take such trades. Same goes with the digital, Nifty India digital. So both stays red. Auto was in the lagging quadrant, weakening quadrant, I'm sorry, in the RRG. Auto monthly, two HAGBs back to back. Now, HAGBs are signs of consolidations, but these consolidations are choppy consolidation. They are coming with pretty longish shadows, means it's range bound and choppy. You can figure that out from this chart, right? And the daily chart, of course. So sharp fall, equally sharp revival. Timing of entry is crucial and timing of exit is more crucial. That's the kind of market we are. Anyways, auto weekly state of flow is still positive. Heiken is still fine. So we should maintain price wise, it should be bullish. RRG wise, it is okay. It's weakening, but RRG is still, it has some relative strength. It's on the right hand side of the zero. It has some relative strength. So we'll keep it. We'll keep it a green flag. Now come to the lagging. We have FMCG and Realty. Realty, not a good RRG, right to left. So this is a weak RRG. FMCG struggling for quite some time, picking up a bit of momentum. We may see some individual selected stocks trying to go up. FMCG, we had kept it neutral. That's because our weekly state of flow was improving, relative strength was not improving. State of flow did not come with a strong hike and it came with both the shadows. And so we decided, let's stay away. The monthly is very poor. State of flow is negative. And I think we will maintain. Stay away from FMCG. I don't think you would have got any significant trade here. That's the FMCG. The other one was Realty. Realty was picking up and with some decent move. Last week's HAGB state of flow green was a sign of prospective rally, but no, that was more weakness from the polarity. Considering the monthly state of flow was negative, everything opened up on the downside. So I will remove the green flag. The state of flow is neutral. I don't have a strong red Heiken. My RRG is negative, and so I'm going to go neutral on this. I wait for the weekly to turn negative. Last quadrant, that's improving. Consumer durables. Improving is a good word, is a positive word which gives hope of further strength, further rally. So consumer durables is improving. Media is improving. Congratulations. And small cap is just in the improving quadrant, but it's doing a U-turn. So I'm not too sure about that. So consumer durables and media. If you follow my work, of course, you know I'm not a big fan of media, but it's creating what anyone would love to call a left shoulder head and maybe a right shoulder breakout possible. Monthly charts, not looking good. Maybe this is the final, no, I don't know, final leg or not, but these kind of sell-offs generally create divergences and a bounce back. That's exactly what is happening on the improving. My state of flow has gone HAGB. So yeah, it was positive. I can keep it positive and wait for this HAGB breakout. I personally am not a big media stock fan because they don't add up too much and they are all over the place. At times they rally well and they give away also really, really well. Right? That's the media. We spoke about FMCG, consumer durables. Let's talk about consumer durables. This is where you get some good quality trending stocks. Monthly, huge range for the last 2 months. HAGB, big, good close towards the upper end of the month's range. Very good close. Monthly state of flow, neutral, negative, I'm sorry. Weekly state of flow, positive. This is where it is kind of conflicting. Sharp sell-off, sharp recovery, back to the previous highs. Do we get a breakout or do we see a follow-through move? RRG, relative strength-wise, is improving. Price-wise, weekly price-wise has improved. Monthly, not so great, but the close is towards the high. So adding up all of these, I think we should maintain a green flag. We can expect further rally. So those are the 16 sectors. Apart from that, there is capital market. We had kept it neutral. It should stay neutral because state of flow has gone away. We have chemicals, which was bouncing back. Now it has gone neutral. So this has to go neutral. And then we have defense and tourism. In defense, we were bullish, selectively bullish for the last 4 weeks. It's again back to an important level. This sector is not too much or is not far away from its all-time highs. So can expect a breakout, keep bullish, and finally tourism. Nah, we have to take away the bullishness. The bullishness was primarily, last week's bullishness was primarily coming from the weekly state of flow improving with the nature GB. So all in all, what we were looking out for is a breakout above last to last week's high. That did not happen. It fell. And so these erstwhile green flags will go neutral. Not bad. Quickly, let's take a look at the metals. Silver, big move coming in, 8%. And monthly is exceptional. Weekly going through a short term correction and picking up now. So far, so good. I think these are bullish readings. Revival, 1.5% from gold. Gold chart is far more structure wise, much more superior than that of silver. But trend momentum wise, it's bullish. Aluminium, copper, they've all kind of given their share of correction and trying to turn around so you can have short term momentum moves on the upside. Natural gas had a big move and it's gone very, very, I'll add another very quiet after a move like that. It's very difficult to actually trade these guys. I'll talk about crude, which has been rallying consistently well for the last couple of months now, back to some important levels which had held the energy down. So this can be, you know, under discussion soon if you get a good breakout, if you do get a breakout in crude. USD INR 91, that's not very good. We were hovering at 90.6, 90.7, 90.8 for some time. And now it's picking up above that 91, which is, again, not that great for the Nifty. So overall, I've taken a little bit of extra time this week, but it was an end of the month also. Tough times will continue. And if you are a momentum trader, hit and run is the term I use. Try and come out of your trades quickly, or else whatever profits you see will come off. Long only traders, time to exercise some patience and wait for momentum to pick up. And long only traders or any trader, investor in you will probably should start to look out for maybe few opportunities in those sectors which are beaten down. Are there any value there or not? So I think the hard times will continue. We'll see what's in store for us next week. And based on that, we will evaluate again next weekend. Thank you and trade well.